Here it is, that thrilling and insightful guide to investing for beginners that you've been dreaming about finding all your life. Well, perhaps we'll leave thrilling to your judgment. However, we are quite confident that you'll become more than just a little excited when you learn the truth about the wide array of opportunities available to you through investing. Opportunities you can use to establish and grow your fortune. Welcome back to another episode of Living Fire. If you never want to miss an upload, make sure to subscribe to the channel, Introduction to Investing for Beginners. Before we get along with investing for beginners in earnest, a gentle suggestion: relax. The field of investing is a large one, and there's virtually an infinite amount of things to learn about investments. The best, most successful investors will tell you that they are continually learning and continually honing and expanding their skills at making money in the financial markets. You can't learn everything there is to know about investing, or even just investing for beginners, in one day. But fortunately, you don't need to do that in order to begin a career as a successful, profitable investor. One of the most glaring holes in our educational system is the lack of even basic education in the areas of personal finance and investing. One of the most successful traders in history once remarked, "If I'd only been taught in high school what I later managed to learn on my own about investing, I likely could have retired wealthy by age 35. Well, perhaps that's a somewhat optimistic and hindsight estimate of investing success, but there's no doubt that anyone can potentially reap massive financial benefits from simply taking the time to learn the basics about investing as early as possible in life. So be thankful if you're watching this video at age 16, but don't be discouraged if you're already well past high school age or even middle age. It's not too late to begin building a fortune through investing, and the sooner you start, the sooner you'll move well beyond investing for beginners and achieve your financial dreams. There are two truths we'd like to stress to you at this point. One is the fact that taking the time to acquire even a very rudimentary knowledge of investing, whether it's 16 or 60, will put you well ahead of your peers in terms of financial literacy and ultimately in terms of financial success. The second truth comes from one of the richest commodity futures traders, an important secret about investing and wealth. You can make a lot more money a lot faster by sending your money to work for you every day, rather than just sending yourself to work every day. And that's all investing is, putting your money to work for you, making more money. Basic types of investing. This is the building block of investing for beginners. There's an endless list of specific investments you can make, but nearly all investments fall into one or the other of a handful of categories, commonly referred to as asset classes. An asset class is made up of investments with similar characteristics that are also usually governed by the same set of financial regulations. Asset classes. The asset classes that most people are familiar with are as follows: stocks, also known as shares, fixed income investments such as bonds, and cash or cash equivalents, which include money market funds. There are several other asset classes you may wish to explore investing in at some point, which include the following: commodities and futures, such as oil or gold; alternative investments, which include real estate, foreign exchange or forex, and collectibles; sustainable, responsible, and impactful investments, or SRI, with a primary focus on beneficial social or environmental effects. Generally speaking, alternative investments tend to be less liquid, and more traditional asset classes, stocks for example, are an extremely liquid asset, whereas a private equity investment may require tying up your investment capital for a minimum period of 5 to 7 years. Equity investing. Equity investing, the buying and selling of stocks in publicly traded companies, is what most people probably think of when they hear the word investing, and is a popular investment for beginners. Publicly traded companies offer investors an equity interest in the company through the purchase of stock shares. So for example, if shares of company XYZ are trading at $1.28 per share, then you can buy 100 shares for $128, not including possible brokerage fees. By selling shares, companies are able to raise capital to help them grow or expand. Fixed income investing for beginners. Fixed income investing refers to investments in debt securities that offer investors fixed-rate interest payments over a specified time frame, the life of the debt security. Debt securities are most commonly referred to simply as bonds. The bond market is one of the largest markets worldwide, thanks in part to the massive amount of debt being carried by most governments. When you purchase a bond, you are providing financing for a company or a government, and in return, you receive a specified interest rate known as the coupon rate. Interest on bonds is typically paid either semi-annually or annually until you receive the bond's full principal amount back on the bond's specified maturity date. The coupon rate is the yield offered on the bond at the time it is issued. Zero coupon bonds. Some bonds are issued as zero coupon bonds. Rather than offering regular interest payments, zero coupon bonds are instead sold at a significant discount from the bond's face value. Investors make a return by purchasing the bond for less than face value and then redeeming the bond at maturity for full face value. For example, a zero coupon bond with a face value of $5,000 might sell for $4,500. The investor pays $4,500 to buy the bond and then, at maturity, sells or redeems the bond at the face value of $5,000, thus making a $500 or 10% return on their investment. Bond sellers, governments, and corporations. Bonds are sold by national, state, and municipal governments. Municipal bonds are very popular because many municipal bonds earn interest tax-free. In addition to governments, corporations also issue bonds to obtain financing. Corporate bonds frequently pay higher interest rates than similar government bonds, but they also carry more risk. Corporate bonds are also typically more volatile than government bonds because their value can be affected by the perceived value of the corporate issuer. Fixed income investments may appeal to investors planning retirement who have large amounts of investment capital available during their working years. Such investors can purchase a large amount of bonds, collect interest payments while they are working, and then around the time of their retirement, the bonds mature and return the principal or face value to the investor. Other asset classes, commodities, forex, and other alternative investments. One of the most common attractions and potential benefits that alternative assets, such as commodity futures and forex trading offer, is that of increased leverage, the ability to use a relatively small amount of investment capital to control a relatively large investment. So for example, commodity futures trading typically offers leverage in the neighborhood of 10 to 1. In other words, to invest in a standard 100 troy ounce gold futures contract usually requires a margin deposit of only 5 to 10% of the total value of the contract. In short, leverage offers you the ability to make a lot of money with just a little money. However, leverage applies to both positive and negative investment outcomes, just as leverage investments amplify profits, calculated as a percentage of required investment capital. They likewise amplify losses. Investing in leverage investments requires careful money management. Unlike buying stocks or bonds, where the absolute maximum possible loss is no more than your total investment, with leverage investments, it is possible to lose more than your total investment. Investors who are unfamiliar with trading leveraged investments often see their trading capital erode at an alarming rate. Leveraged investments, used wisely, can be an excellent vehicle for rapidly growing your investment capital. But to successfully take advantage of such investments, you have to clearly understand the associated risks. We're not advising you to avoid leveraged investments altogether, but we are very strongly cautioning you to make certain before trading them that you fully understand the implications of using high amounts of leverage. Principles of investing for beginners: risk and opportunity. One of the basic principles of investing for beginners is this: risk and opportunity go hand in hand. They increase or decrease in conjunction with each other. Investments that offer higher potential for profit carry correspondingly higher levels of risk. Likewise, investments that offer a lower potential return on investment, or ROI, typically offer greater security and less risk. For example, a cash equivalent investment, such as a certificate of deposit, CD, offers a very low but guaranteed rate of return. Such investments are appropriate for individuals with a very low risk tolerance, who are more concerned with protecting their investment capital than with growing it. In contrast, equities offer a sustainably higher potential rate of return, up to 10% or more annually, but also carry a much greater degree of risk. There is no guaranteed return with equity investing. Because of the correlation between risk and potential return, investors need to carefully consider their risk tolerance when selecting investments. how much risk you're willing to accept in return for the opportunity to realize X amount of profit. It's also important to think about your personal investment goals, the reason for your investment choices. An investor who is looking to generate a second income through investing or amass a large enough fortune to retire on will make much different investment choices than an investor who is merely seeking to earn a little interest to help offset inflation and protect his or her purchasing power. And with that, we've reached the end of this episode with all the information about investing. Are you interested in investing? Would you like us to continue explaining investment types? Get involved and let us know in the comments section down below. If you enjoyed this one and found it helpful, remember to leave a like on the video and to subscribe to Living Fire for even more amazing videos just like this one. Thank you for watching, and we'll see you in the next one.